I'm Danielle Hale, Chief Economist at Realtor.com. As summer gets hotter and Independence Day celebrations near, I'm going to discuss the latest readings on consumer confidence and sentiment and the Fed's preferred inflation gauge. I'll review what happened to mortgage rates and the plethora of housing data we saw this week, including existing home sales, new home sales, and pending home sales. I'll dig in on the widely watched Case-Shiller price index and compare that with more recent weekly housing data from Realtor.com. Finally, I'll look at the latest Realtor.com research on housing affordability trends. Let's start with inflation, which showed that the Fed's preferred gauge rose 2.3% in the year, even as the index, excluding food and energy prices, edged a bit higher. Consumer confidence slipped in June, and while consumer sentiment improved, both measures remain at a concerningly sluggish level. The sour outlook from consumers and consistent wait-and-see policy from the Fed helped push interest rates, including mortgage rates, lower. The dip was housing-friendly, but small, so its impact will be modest. In housing, the April Case-Shiller home price index showed regional divergence, with price gains strongest in Northeast and Midwest markets like New York, Chicago, and Detroit. Southern markets, Tampa and Dallas, were the only two to see price declines among the 20 studied in the last year. Existing home sales rose in May as the number of for-sale homes grew, bringing month supply to a nearly 9-year high. Nationwide, we're still short of a buyer's market, but buyers are gaining market power, especially in the South and West, where inventory growth has been more abundant. Pending home sales, a forward-looking indicator that measures an early stage in the home buying process, also moved higher in May, suggesting that existing home sales may edge further higher in the months ahead. But new home sales fell from both the prior month and prior year. In recent years, builders have benefited from limited existing inventory that pushed existing sales to 30-year lows. But as more homeowners decide to sell, builders may increasingly face competition for buyers. Looking at Realtor.com weekly housing data, we see that home prices eked out a small gain and time on market slowed less than in prior weeks, even as new listings and active inventory continued to climb. Again, new listing growth rose at a slower pace than we've seen recently, which could slow the buyer-friendly momentum we've seen in inventory recovery. Buyer-friendly trends are really paramount because the housing market has been tipped so far in favor of sellers that affordability has defied expectations and made it almost impossible for buyers to stick to the 30% rule that suggests keeping housing costs to just 30% of your income. A Realtor.com study found that a median income buyer of the typical for-sale home could meet this affordability guideline in only 3 markets in May: Pittsburgh, Detroit, and St. Louis. How does your market stack up? You can find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates, and Instagram for graphics. And finally, a brief programming note: we will not have a video next week as we celebrate Independence Day. I'll be back the following week. I wish you a safe and happy 4th of July.